Good afternoon to everyone. My name is Engineer Bienvenido Anatan. I am the distribution reliability expert for this USAID project, and I am based in Thailand. My colleague worked for this toolkit. I work with Engineer Romelio Penes, who is also our financial expert for this project. So I would like to present this afternoon the COVID Financial Impact Assessment Tool for distribution utilities. When I refer to the distribution utilities, I also refer to the electric cooperatives since this is applicable to both. The basis of this toolkit, USAID requested consultants to prepare this toolkit with using the World Bank as a model for the COVID Financial Impact Assessment Tool for water and sanitation providers user's guide, which was issued in May 2020. We customized this to correspond to the peculiarities of the power sector, especially for the operation of distribution utilities here in the Philippines. Now, the purpose of this guide, we try to quantify the financial impact on the distribution utility operation. And by doing that, to be able to make evidence-based justification for the financial support or for rate setting and recovery mechanism that could be applied to ERC. The data requirements, we use the World Bank model, which tried to make it very simple. So they have a simplified version for the financial model, which assumes minimal data requirements and draws data inputs that are largely available to all distribution utility operations. This means that this toolkit can be used by all electric cooperatives. Now, the disclaimer for this is that the purpose or intent of this model is actually not to replace. So usually distribution utilities will have their own financial planning model, which is being prepared by their accounting department. So this is not a replacement to the financial planning model that may have been developed already for long-term planning. But rather, this toolkit can be used as a rapid assessment tool by high-level management to develop a financial impact assessment that is based on available data that may result from the COVID-19. And also, the good thing about this model is that this can also be used in other crises or in other disasters. So for example, for typhoons, so you can use the impact of typhoons in terms of projecting the operations, how the financial model or what will happen a year after this typhoon or any other disasters or hazards. That said, the model incorporates input cell for revenues and expenses that can be used by individual electric cooperatives to approximate their total operations. Our approach for this model is number one, to provide baseline monthly financial projection scenario, which means that we are trying to provide a business as usual financial model, which means that we will try to project if there is no disaster, no COVID, how will be the situation, financial condition of the utility or the electric cooperative. The second one is to provide financial projections once you have the disaster, like the COVID. So we'll have the COVID impact scenario. And the third one is the evaluation and assessment of the financial projection in terms of the difference. So the difference between your, for example, your profit when you are doing business as usual, or your profitability during the COVID scenario because of its impact. Now we go around the model. So as you can see below, this will be an Excel sheet, and there are five sheets that we're going to use. So the model incorporates a simple color-coded legend for easy identification of cells be that may require input versus those that are formula cells and should not be altered or modified. As shown below, light blue cells with blue numbers or letters are input cells, while white cells with black numbers or letters are formula cells. All data that should be entered on the data input together with the VLOOK or the lookup table is the only one that you can enter data. And you use the historical or projected monthly. Now, the model is composed of 5 Excel sheets. The first one is the data input. I altered it and I added results. So actually, as you input on the first rows, the rows below, you will find the results. So as you change the figures on top, when you check the figures below, including some projections, you can see the changes. The second sheet is the lookup table, which utilizes the VLOOKUP formula of Excel. The third sheet is the revenue plus cost. And these are all generated. And this becomes also an input for the business as usual sheet and also for the COVID scenario or COVID impact financial model. So when you consider the data that we already put in the model, so we have some data already, as you later will see on the sheet. The sample data that I used is the one from a private distribution utility. I was the head of the engineering and operations for Panay Electric company before, which now is being owned by More Electric Power Corporation. So I use the data because they made it available online, available on their website. And so I am using the parameters in this specific distribution utility. Although there are similar in rate structure, some data and assumptions might be entirely different for Mindanao electric cooperatives, and this must be adjusted and customized accordingly to correspond to that of the specific electric cooperative. And in the opening month, so this is the input already. So when is the starting period for the toolkit? So you can put, for example, August, September, October, November. You put the number, and then automatically the month will also correspond. And then you just put in the currency as well. In the second table, you will find the connections. So the connections will be in terms of the type of customers. So meaning you have different types of customers. So I just choose the typical one. You have the residential, the commercial, and then the industry or the industrial. Sometimes we call it also power. And then we have the government, street lights and everything, government buildings, And if you have some others, other customer rate class, then you can include in the others. So the first line, we find the month-end house connection, the number. This number actually corresponds to the present, the actual uh, customers you have for residential, for commercial, for industrial, and so forth and so on. So example here is that the residential, your present, based on the month that you put in, say for example in August, you have the existing number of customers of 60,000. And then you have, based on historical records, you have new connections coming in. You have an increase in new connections for residential, like 500 per month, commercial 20, industrial 5, government 10. So these are assumptions. You have to put in your own data to correspond to your condition. And then there is the assumptions of the increase in new connections. So for example, if you have the load growth, you have the number of customers growing in your area, so you can include here. And that will also be based on the types of customers or customer rate class. The connection charge, so this will be the total payment made by customer before connections. So this can include your service charges, if you are charging bill deposits, meter deposits, if you're charging materials against the customer, then you put it here. And then the base electric consumption, so this normally will be taken from your historical records. Probably you can use your annual so that you can have a good average, and you normally just use the consumption for all the residential customers divided by the actual energy that is being consumed by the 60,000. You divide the total energy consumed by 60,000, then you can break out an average of electricity. So this is not exactly true. This is not precise, but this is just coming up with some figures that actually is based on your historical data. So we're trying to make it simple, and that's why we are trying to use the rolling 12-month period, rolling average monthly, yearly period, and then you divide it by 12, and then you can show, for example, whatever data here. So again, this is an estimated monthly electricity consumption per month per customer rate class. Now, for the next table, you have the electricity rates. So again, this was the data here was used from the private utility in Iloilo City, but the breakdown of charges will basically correspond to all the distribution utilities and electric cooperatives. But this is not really a breakdown of, say, 20 or 30 items, but this will be lump summarized in several major charges. The first one is the generation charge. The second, transmission, systems loss, and then you have the distribution, supply, and metering charges. Then the next is subsidies and universal charges. Then you have the VAT charges, and then you have the weighted total average rate. So the total average rate is the one that is approved by ERC. And I understand that you first get what has been approved, and then you spread that to the different rate class. So looking at the bill component, again, just to explain where this money comes from and what actually the distribution gets. So generation charge will go to the power plants, transmission will go to NGCP, system losses will go to the electric cooperatives, The distribution, supply, and metering definitely will go to the EC. And then you have the subsidies and other universal charges. So you have the senior citizen lifeline rates, missionary, universal, environmental, which are paid with different relevant customers or agencies. And then you have the VAT, which includes other government mandated taxes, which has to be paid to the government. What makes up the electricity? So basically, if you look at it, the generation charge is basically the lump, the highest pie on the pie, and the distribution charge would only correspond to about 15 to 20%, depending on the ERC approval. Now, for the data input, now this will come from the annual financial statement. So this will be coming from your financial statement, from your cash flow. So these are the operating expense. Now, the operating expense, you have the salaries, wages, and employee benefits. And then for the operations and maintenance, everything that is outside of the list. Then you have contracted third-party services. You hired other contractors to do specific operations and maintenance for your system. And then included here, the depreciation, amortization, taxes, fees, permits, other expenses, interest expenses, all of this you will find in your annual financial statement. So there will be other different terms, but you can lump them on specific items and you can use the model. So again, there is the monthly average that will be used here. So if you have annual report, then you can divide it by 12. And then if there is anticipated escalation of whatever increase in the different expenses, then you can make some changes plus or minus as an escalation clause. So for the data input, you have, which is very important, is the assumptions on the COVID impact on your revenue or sales or profit. So the first one is, of course, the electricity consumption, whether electricity consumption because of COVID has decreased or increased. And then you have the number of connections, how they are affected in terms of percentage, which you already mentioned. For example, normally you have new connections, but then because of this, you have the reduction of 50%. In revenue collection, so probably you have 80, 90, 95% revenue collection on the average for the year, but then because of this, you have reduce it by 5, 10, 15, so you can include here. And then probably you have take or pay provisions for your power generation, then it comes in again. It impacts your cost. So for this one, I would suggest that in the workshop, you can discuss we can add or we can subtract some of the assumptions that we made here. And we can change the model and then include whatever other assumptions that you think should be included. Now, in terms of assumptions on the expenses, again, so it's just a list of the other expenses and then how they are being impacted by COVID. So whether there is an increase or decrease. So this will be, the parameters will be on a case-to-case basis. So different utilities, cooperatives will have different results. For capital expenses, so again, this will be added cost for the utility operation because of COVID. So probably you have to buy or provide kiosks or hand washing stations sanitation equipment and everything. You have thermal scanners and everything, and probably you need to have personal protective equipment. So you can have a list of other related capex on fighting against COVID. So this can be your list, and you can include when normally you are going to buy for this one, or are you going to buy this repeatedly every month. Then we can also put this on the model. So for now, what we are saying here is just on the bulk, you're buying it for 1 year, specific month, and then we put it as additional cost for your operation. And the last of the input is the historical monthly load curve lookup. So this will be based on your monthly load, December for the month, and then you can have an escalation or growth for the next year. So the first December and then the second December, probably you add plus 3%, or yeah, plus 3% based on your historical data. So by doing this, you actually immediately will find that in the toolkit, you will have already the result, the financial results of the cash flow in the impact of COVID. So for example, in everything that we have inputted here, we found that the total revenue based on business as usual, you're supposed to have like 4.8 billion income, but because of COVID, you only have 4.6, which is a reduction of 274 million. Operating costs increased because of COVID. You probably have a decreased operating cost, and then profit after taxes. So definitely it's negative, and then additional other related costs. You have like 500,000, and then the cash flow will be like negative because of the impact of your poor collection efficiency. So the model will show this graph, which correspond to the first one. And then this also shows you the cash flow on a monthly basis, and also the how the curve changes with the business as usual, and also with the COVID, and as well as the financial impact because of COVID. So you go to the revenue plus cost. So you actually don't change anything here. So but you can see how this moves because of the changes you did with the data entry plus the lookup table for your monthly load curve. So you can see here the residential customers, the the income for the revenue, yeah, and cost for the residential, and then you have also the commercial. So typically these are similar Excel sheets: industrial and power, government, customer, and then also other customer indicators. And then this revenue plus cost will show the business as usual figures in terms of the monthly demand, production requirement, actual production, electricity consumed, and then you have electricity surplus or shortage, which is actually the systems loss. Again, In the revenue plus cost, business as usual, this will be your revenue with the impact on the expenses. And then you have the COVID scenario. So you have the monthly production, the revenue, and also the expenses. And then you go to the income statement. So basically you can see the flow of the cost and also for the COVID scenario. So for that, thank you very much. We can, if you have some questions, you can check with the, I believe that the model has been shared with you and you might have looked at it already. So you can manipulate, you can check the line items, and during our workshop, so we will be discussing all this. So maraming salamat. Thank you po sa lahat.